I'd like to move on now to the real estate market. You know, we look at this Case-Shiller, one of the best indicators out there of the underlying real estate and housing market conditions. And, well, we surpassed the 30% decline from the peak in, I believe it was late 2006. But, you know, some folks are calling for a bottom here with low interest rates, you know, some of the lowest in history. However, my research indicates we may not have found the bottom. The coming higher interest rates that are now being predicted by the bond market implosion could be bad news for homeowners as increasing interest rates increases the cost associated with mortgages.
Well, sure. Home prices in the U.S. dropped the most on record in the first quarter of this year. And, you know, they're talking about little upticks here and there. Let's look where the upticks are coming from. Sure, you know, life goes on. People still buy homes, but who's buying them? First-time homeowners. They're buying at the lower end of the marketplace. Foreclosures make up another large percentage of the sales. And what else is the incentive? Oh, that $8,000 tax break that you get when you buy a new home. So those are the things that are driving the market, all temporary. And as you point out, interest rates are going to start coming up again. They're going to have to, because we're going to be facing hyperinflation. If they continue to print money the way they are, there's going to be an implication of these bailouts that we've never seen in our lifetime, and all of this infusion of money printed backed by nothing but air. So interest rates are going to have to shoot up. It looks like we're moving into a Jimmy Carter late 1970s scenario once again.
Well, you know, with all this economic trouble coming down the pike, you talk about an economic slim fast. I think this is a very apropos explanation. And most of us, this slim fast is not going to help our waistlines. But according to your work, it's going to be an economic slim fast for our home budgets. And I agree with you. You know, we've been telling folks for some time now that frugality is going to be the new cool trend. Tell folks more about how they need to be cutting back on their home budgets.
You know, this is what, as you mentioned, it's frugality. This is the basis of, you know, Yankee frugality. Use it up, wear it out, make do without. And all of a sudden, we become a consumer society. So now people are going to be planting, you're already seeing it, again, a trend that we had predicted, people planting more of their own gardens. We've overconsumed in every way. Look what this nation looks like. We're the laughing stock of the world with our weight problem. Our cars are too big, our homes are too big. We've overconsumed in every possible way, and we're not producing. So what's going to happen with this downturn, it's going to force people back in to becoming sensible in a lot of ways. There's no need to buy a lot of stuff. Look, we're the only country in the world that has self-storage units. We have so much junk, we're storing it off-site. So this is going to be a big pullback.
I guess it'll take a sea change in the typical American's mentality to shift away from, as you rightly refer to, this consumerism trend into the more traditional American ideology, Benjamin Franklin's Poor Richard's Almanac that's, you know, says neither a borrower nor a lender be. And there's so much wisdom in there. We've just turned our backs on it. And we're all playing, you know, Wii video games and watching satellite TV when we need to be out there, as you say, making a new victory garden, planting potatoes and things that we can barter with if things get really difficult. It's a completely different mindset.
Sure, and just as you put it, you know, as people playing these video games and sitting around, I had a garden for many, many years, and my garden was my gym. You know, I was in great shape running around, hoeing and, you know, and digging and planting and weeding, and it's that kind of thing. And also, there's no reason to buy so much of, if you're going to buy anything, buy quality. Quality is going to rise to the top during the Greatest Depression. Average is not going to make it. We recommend don't eat corporate food, buy local. The strength of the nation lies in the strength of the community. As much as you can, support your local. And that's where the future is as we see it.
That's a good point. James Kunstler, excellent author, agrees with you there. He's been pounding the table on how important it is to support your local economy. And, you know, why not buy fresh produce locally? I mean, even honey, for instance, in your area provides all kinds of health benefits that are null and void when it comes from a different part of the country or a different part of the world, for that matter.
Well, here's one for you. It's a proven medical fact that honey does more to soothe a child's throat than the most expensive cough medicine.
Incredible. And you know that you can just put it in tea, for instance, and that'll help soothe the throat. Honey is one of nature's only foods that can sit out in the open. It requires no refrigeration whatsoever.
The future, by the way, is in clean foods, which is a term we coined many, many years ago. It's more than organic. It's brought to market in the most sanitary way with the highest value of nutrition. To stay healthy, you have to eat healthy, think healthy, and live healthy. And that's what the future is going to be. The quality is going to rise to the top as we go into the greatest depression. Average won't make it.
I just read an article yesterday that claimed that fainting is now a $5,000 malady if you end up in an emergency room. Wrap one's mind around the thought that you might have a fainting spell and wind up with a $5,000 bill. Most Americans, by the way, barely have health insurance.